good morning team. It is Tuesday, August 16th. I'm Amy Corr and I'm joined by Kevin Van Eck, and here we are in our Goose Island studio. So we are going to talk a bit about market statistics today. There's a lot going on and a lot that I think we all should be aware of. So grab your coffee, your tea, your power smoothie, your lemon water. I know, here we are again. And let's jump into another episode of Coffee with Amy and Kevin.
Sometimes when I'm falling asleep, that's the only thing that's spinning through my mind. Lemon water, power smoothie. Good morning, everybody. Thanks for joining. Yes, like Amy said, it's been a while since we've done a state of the market, and we know the market's continuing to shift. So we're going to cover three things today. We're going to cover inventory, we're going to talk about sales, and we're also going to talk about housing prices. So make sure you have your coffee, and let's start with inventory.
Yeah, and get your pen and paper. Lots of great information, because the reality is if we're all talking about this is great information you should be sharing as your clients are wondering what's happening in the market, right? So let's go into probably our favorite topic, which is inventory. And I think we've been talking a lot about the idea that inventory is going to be the crystal ball in all of this. It's one of the, probably the largest indicator for us being in the business and what we should be watching to see where the market is going. And so I've got some interesting numbers to share this morning. Homes for sale. So these are in different metro areas across the United States. But in Atlanta, homes for sale are up year over year by 58%. Houston up 30%. San Diego up 22%. And then Denver up 81.5%. Now, these numbers shouldn't freak us out, but what they are showing us is that the market is starting to move in a direction, actually probably a direction we want it to move in, right? Inventory was at such a low level in all of our local markets as well that it was making it so challenging for buyers to find homes that they could purchase. So the trend or the news that we're hearing about these numbers, we should see these as something that we should welcome. And when you hear some of these numbers, because when Kevin, we first looked at Denver, 81.5%, you immediately think, holy cow, that's a pretty high number. But, we talked about a story that I think can put this into perspective. And this was somebody that we knew from New Jersey. And he had said 2 years ago in 2019, no, I guess 2020, kind of right as the pandemic was happening, he was saying that they had over 100 houses for sale in their community. Last year, they had 10 homes. I repeat, 10 homes available for sale versus 100 the year before. So think about that drop in inventory. And then he said this year, inventory is up, but it's 22 homes. So again, 22 homes, that's up a lot from 10. It's double what we saw the prior year, but still extremely low when you look at 2 years prior, the number was at 100. Right. So when we're looking at this trending, we still have to recognize that our inventory numbers are still really low. But what we are seeing is that the market is starting to shift in a direction that is good for us. Inventory is moving in the right direction. In fact, what we should also know is that we saw a pretty quick increase nationally, but a lot of the experts are saying while the spike happened quickly, we're probably going to see a leveling out and a little bit more of a normalized level of inventory as we move forward. And one other thing to look at, and I believe we have a slide here on this, is that Realtor.com reported that inventory is up this year compared to last year at this time. But if you look at the 5-year trend, aside from last year, we are still lower than the last 5 years. So, when we're looking at the inventory game, we are headed in the right direction. But I think bottom line, we still have a long way to go before we have to get nervous about, too much of an increase in inventory. That's still going to be the ball game, I think, as we wrap up 22 and we move into 2023.
That's right. Like you said, really, the inventory is what drives everything else, especially as we get to the second point, which is housing price growth. And we know housing price growth has been astronomical over the last 2 years, and it is still strong. So they are reporting that housing prices are still increasing, but obviously decelerating. A lot of that has to do with mortgage rates and some other factors. But when we talk about housing price growth, inventory is going to impact it. The thing about housing price growth, though, is that the data lags, right? We have to understand that, when you put a property under contract, it may be a period of time until it closes, 30 days, 45, 90 days in some cases. And we are seeing, especially with new construction contracts, sometimes those are 3, 6, 10 months from when it was contracted. So those prices, those contract prices, the sales prices were determined in the past. So we'll see what happens with housing price growth. But an important note about this, and we'll show a slide here from Altos Research, which showing that price reduction activity is far higher than it has been over the last number of years. And the CEO of Altos Research said that they anticipate that over 40% of active inventory will take at least one price reduction by September.
Wow.
So that's a big number. So you're probably seeing that in your local market too, where the inventory that is on is having to reduce and adjust pricing in order to attract buyers.
Yeah, I mean, I just think we're in this market that is suddenly kind of adjusting to what this new normal is. And, I think what we always talk about is the market is real time, just like the stock market. Things go up, things go down. And I think that's why it's so important as, brokers and advisors of just really watching all of this stuff so that you can talk about this in a way that really makes sense and can be great when you're giving advice to your clients. So I want to talk about the third point, which is sales. And, that is, what is sales activity right now? I mean, we are definitely seeing that due to the activity or the jump in mortgage rates, we are seeing sales activities slow down. We all know that for certain buyers, it caused them to take a pause in whether or not they wanted to buy in this market right now. For some certain first-time home buyers, unfortunately, maybe that jump in interest rates actually had them become somebody who had to pull out of the market altogether and really sort of wait until maybe rates come down or there's an opportunity for them to afford a house down the road. So we are seeing a slowing in sales. The other thing is that NAR reported in June, sales dropped 8.6% year over year. So I think this is all really natural though. When we're talking about inventory, increasing, we're talking about, just all of the different dynamics that are happening in the market, of course we're going to see a slowdown. And you talked about deceleration. And I think we talked about it in something a couple weeks ago that deceleration doesn't really mean depreciation. It just means when you're going 100 miles an hour on the highway, when you suddenly take your foot off the gas, it doesn't take you to a stop, but it takes you from 100 to 75,
right,
which sometimes is a better pace to be going. So the other thing that's really interesting is that experts anticipate that we are going to see the numbers show a further decline as we look at July numbers. But also what I think is so interesting, Kevin, is the idea of what's happening in new home building. You referenced it a little bit earlier, but we are actually seeing that new construction, the Census Bureau says sales are down 17.4% from this June 2022 over June 21. So it's kind of interesting when we think about why is this happening in new construction? And I think you hit the nail on the head. A lot of these contracts were put together 9, 12 months ago. Some of these people who put offers in on these properties maybe didn't have a mortgage or a lock on their rate. And now that all of a sudden interest rates are changing, affordability is changing, right? I think we're also seeing with a lot of these new home builders, there's been still a lot of issue with supply. I know for a lot of our local builders and developers, it's been really hard to know what pricing can be because they don't know what the pricing is going to be for them to actually build the home. So with that being in limbo, it has caused some of these developers to either slow down or pull out of the market. And I think it's also had buyers take a step back, right? And say, I don't know if I'm going to be able to afford what this price is going to end up being given all of these other outside circumstances. So we're definitely seeing that as well on the home front as far as sales go. Yeah.
I mean, it's tough. If you went under contract 12 months ago, interest rates were far different and the cost of living was far different given inflation, right? So to wrap, let's talk about inflation. Inflation is going to drive a lot of what happens because the mortgage rates of what we talked about, the Fed is going to continue to adjust the mortgage rates, the 30-year fixed and the Fed funds rate. They're going to adjust it based on inflation. So if inflation remains elevated, we're going to see continued changes in the mortgage rates. The other thing with price reductions coming, with inventory growing, but that, like Amy said, that escalation is slowing, but we're still seeing inventory growth. And then with mortgage rates, it'll be interesting to see what happens. But I think the key point here is when we talk about the state of the market is not to panic, right? We've been through this before. It's cyclical. We've said it a million times. This isn't going to be 2008, 9, 10, 11, 12 all over again. What it is going to be, though, is an opportunity.
Yep.
And so you and I have spent a ton of time talking about how you can harness the opportunity right now when we know that other agents are panicking, when they're paralyzed, when they're doing nothing, when they're not reaching out to their database. Now is the time for you to ramp it up.
Yeah, I mean, there's lots to talk about. So make sure you do ramp it up. It's a great time to reach out to your clients. So on that note, take a look at the attached slides that we provided. There's some really great insight. These are things you can share directly with your sphere of influence or your clients. Make it a great Tuesday. And until we see you next week, remember, you got this.